Naked options versus vertical credit spreads. This topic is so incredibly nuanced that I'm going to try to break it down to its most simplistic, but in no way is this comprehensive. So, when should you trade naked options? There are a few times when you should trade naked. First off, if you're using a cash account, then you should probably never trade naked because the buying power reduction is going to be so incredibly high. Assuming that you're using a margin account, whether it be Regulation T or if you have more than $100,000 or $150,000 and you qualify for a portfolio margin with your brokers, then you really should only trade naked if you actually want to own the underlying stock at the strike price that you're selling, or at least close to the strike price that you're selling, because that way you can manage the position slightly, so that way you can get assigned at a more favorable price. As far as vertical credit spreads, when you sell naked, you're able to collect more premium. And the reason for that is you're assuming more risk. Vertical credit spreads are also defined risk trades. And you can trade them whether you're using a cash account or you're using a margin account. The buying power reduction when you trade vertical credit spreads is going to be the maximum loss less the amount of credit that you received. And probably the best benefit of trading vertical credit spreads is that you eliminate your tail risk, meaning that if a stock reports earnings and it falls 50%, then again, your maximum loss is going to be the width of the strikes less the credit that you receive, and you don't have to worry about what the stock does, and it doesn't matter to you whether the stock goes bankrupt because again, your maximum loss is already predetermined and it's already defined. In general, when trading, I use a mix of naked options and vertical credit spreads. There are also times when I'll sell naked and then hedge that position, or I'll have a portfolio hedge by buying some S&P put options. So you have to mix and match and combine vertical credit spreads and naked options. I only want to sell naked options at a strike price that I would want to take ownership of the stock. David Jaffe with beststockstrategy.com. Watch this video right here because YouTube believes that you would enjoy it the most.